get you up to speed on the top story of the day, the collapse of Silicon Valley Bank, what happened and where we stand today. So here's everything you need to know about the biggest bank failure since the 2008 financial crisis. Silicon Valley Bank, or SVB, is a 40-year-old bank headquartered in Santa Clara, California. It is the 16th largest bank in the U.S., with much of its focus on Silicon Valley and riskier venture-backed startups. Nearly half of all U.S. venture-backed startups did business with this bank as of the end of 2022. Well, the bank had nearly $200 billion in assets before failing last week.
Now here's the story behind the failure. Essentially, the bank had been taking a large portion of its customer funds and investing that cash in long-duration bonds. As the Fed raised rates, those bonds became worth less and less, and at the same time, venture capital funding essentially dried up, and startups tapped their savings, resulting in a big drop in SVB's deposits. This leads us to the crash. On Wednesday, March 8th, Silicon Valley Bank announced it needed to raise more than $2 billion to bolster its balance sheet. This, however, spooked investors and sent the stock price plunging.
As SVB was trying to save itself, one of the main crypto banks in the U.S. officially collapsed. Silvergate suffering significant losses at the end of 2022, a byproduct of the collapse of crypto exchange FTX. Well, ultimately, the bank collapsed after a decline in deposits. On Thursday, March 9th, Silicon Valley Bank depositors, they withdrew more than $42 billion. By the end of the day, the bank had a negative cash balance of nearly $960 million. That's according to the California Department of Financial Protection and Innovation. Some SVB customers received an email assuring them that it was, quote, business as usual. That's according to reports from CNBC.
On Friday, trading was halted and the street started speculating about a buyer for SVB. California regulators intervened, shutting the bank down and putting it under control of the Federal Deposit Insurance Corporation, or FDIC. Over the weekend, the U.S. government took more steps by intervening in the collapse of Silicon Valley Bank, announcing all customer deposits will be protected. They then said they would take a similar action at crypto-focused Signature Bank, which New York state regulators closed on Sunday. The Biden administration is pushing back on critics calling this a bailout, saying no losses will be borne by the taxpayer. That brings us to today. President Biden trying to reassure Americans about the U.S. financial system.
Today, thanks to the quick action of my administration over the past few days, Americans can have confidence that the banking system is safe. Your deposits will be there when you need them. Small businesses across the country, the deposit accounts at these banks can breathe easier knowing they'll be able to pay their workers and pay their bills. And their hardworking employees can breathe easier as well.
Despite the action from the federal government, regional bank stocks are under a tremendous amount of pressure today, despite Biden's reassurances. You're looking at First Republic off just around 48%. Significant selling across the board here, as there is worry out there that regulators may have not done enough to stem some of those outflows following the collapse of Silicon Valley Bank. So certainly we're seeing some of that worry reflected in the regional bank names today.